Okay, so just wanted to recap what we've already talked about. Look, we've already talked about the first four on this list, right? Started off with this idea that, okay, somehow we've got to make sure that if there's unsafe drivers out there, they're being responsible financially for the accidents that they cause. So we used to only require that for this group of people we thought were unsafe drivers. Those are financial responsibility laws. Over time, we realized, wait a minute, anybody can have an auto accident. So the problem with the financial responsibility law is the first accident. Because before that, we said you didn't need to have it, but now you do because you've caused an accident. Well, in the meantime, that first person that you've injured is kind of out of luck. So we moved to compulsory insurance laws. And again, 49 out of 50 states, you want to drive, you got to have auto insurance. That's the law. What about people who don't comply with the law? Well, you could have an unsatisfied judgment fund. The problem is that requires a lot of work on the person who's been injured, right? They've got to file a lawsuit, win the lawsuit, then get the judgment, try to collect on the judgment, prove that they can't collect on the judgment. They got to do all of that before they get compensated. And that's just a lot of work. It'd be a lot easier if we just insured against that on a first party basis with uninsured motorist coverage. And that's what we do in Part C. So you can buy insurance against the possibility that somebody else will hurt you and they don't have auto insurance. That's uninsured motorist coverage. That's how we're doing it. It's in Part C. We can do it that way. What if we could figure out a way to help people afford auto insurance? So they're not buying auto insurance. Maybe the problem is it's too expensive. What could we do to try to make that less expensive? That brings us to some new material. We've got some states that have experimented specifically with what we are going to call low-cost auto insurance. So there were a couple different states that said, all right, the problem is people aren't buying insurance. Maybe they can't afford it. How do we make it more affordable? What if we play around with the limits a little bit? So instead of 25, 50, 10, what if we had 10, 23? So 10,000 in bodily injury per person, 20,000 per accident, 3,000 in property damage. Well, you can already tell what I'm going to think about that, right? I mean, I thought 25, 50, 10 was absurdly low, and you're still keeping a fair amount of risk if those are the limits that you've got. That's my opinion. You can imagine what I think about the idea of, well, let's go to 10, 23. And the problem that they had when they tried to do this is I could have told you this was going to be a problem. You could have told them this was going to be a problem. You don't save all that much money by cutting it from 25, 50, 10 down to 10, 23, because the bulk of the cost is in that layer anyway. And you still have that layer. So when you, just like when you go up in liability limits, it's really cheap because it's really unlikely. When you try to come down in liability limits, you haven't really removed a lot of risk because you've removed the unlikely part and you've kept the likely part. So the bulk of the cost is still there. And that's what they found. These states failed because you can't really reduce the cost of the first layer of insurance. That's always where the most expensive one is going to be. And then as you add layers, they get less and less and less expensive. The way to play this game is to get really high limits for really cheap. When you try to go the other way, when you're chopping your limits down, you don't save all that much. So, all right, fine. Instead of auto insurance costing this person $800 a year, now it's going to cost them $700 instead of $800. Have you made it affordable? No, and you've hacked their limits, by 2/3. That's not a winning game. That doesn't make sense. And both you and I could have told them ahead of time that this wasn't going to work. But be that as it may, they tried. I respect people for trying. That's great. Let's find out. Let's experiment. That's the whole point of having 50 different states is we can experiment with different things and find out what works and what doesn't. This doesn't. Okay, now we know. So if you want to reduce the cost of auto insurance, you can't do it by trying to reduce the limits because it's not expensive to increase the limits. So you don't save very much when you decrease the limits. So they looked at another alternative. Well, what if we told people that if you don't carry auto insurance, then if you get injured in an accident, you may not sue? That's the idea behind no pay, no play. So it's a law in a state that says if you get injured in an accident and you don't have auto insurance, you can't sue anybody else. That fundamentally, that is a huge deal. Again, because of what I said earlier in the last lecture, we really kind of hold it sacred, this idea that if you think you've been wronged, you should have your day in court. And we're wide open on that. We're like, you sue anybody for any amount, anytime, we'll listen. And it's possible that you might be expected to cover the other person's legal expenses, but that's rare. That's extremely rare. So the bias has kind of been towards allowing people to make their claims, and we'll let the judges and juries sort it out. To take that away from somebody, that's a big step. I mean, that's what this does. It says you don't get your day in court unless you have auto insurance. We do have a lot of states who are thinking about, well, maybe this is what we ought to do. So this is very much a stick approach to forcing people to buy auto insurance. On the flip side, when you think about it, is this really a motivating factor? I don't know. I mean, it's an opinion. You can disagree if you want, but I just don't know when people are thinking about, okay, money's tight. What should I buy? I don't know if I can afford auto insurance. I don't know if you're going to tell people, well, if you don't buy auto insurance, then you can't sue if you have an accident where you get hurt. I don't know if that's going to be enough of a motivating factor to get them to redirect scarce dollars to auto insurance. I just, for me, it's hard for me to buy that argument. People can disagree, and obviously states do if we've got this many. So is it really going to be a motivating factor? I don't know. If you think it will, then I guess this makes sense. But think about this, just to kind of illustrate how seriously we take this. So some states, not all, some states say if you're a drunk driver or using the vehicle while committing a crime, you can't sue. So not all, most states are willing to say, look, maybe you were drunk, maybe you were using the vehicle to commit a crime. Every situation's different. You try to convince a jury or a judge that somebody owes you money. And if you can do it, regardless of the circumstances, you have the right to make your case, even if you were drunk, even if you were using the vehicle for committing a crime. I read this and I say, well, wait a minute. You mean I could actually sue if I was drunk or if I was committing a crime and somebody hurt me? Yeah, in most states you can. The only reason I mention it is to say we don't even take the right to sue away from this group. So to take it away from people who aren't paying auto insurance, it just kind of illustrates how far of a step that is. And when you think about it, it's hard to, sure, you say, well, why should a drunk driver be able to sue? All right, so I happen to be intoxicated and I'm stopped at a stoplight and somebody smacks into me from behind. I shouldn't have been driving, no question. But they shouldn't have hit me and the fault is theirs, right? So you start to get into these situations and you can see why people say, you know what, let's let judges and juries decide based on the factors in the case, because you can't say that just because these things are going on, you've got no right to collect. So we've been hesitant to take the right to sue away from this group. So the idea that you're going to take it away from people who don't have auto insurance and you're going to continue to allow this group to retain the right to sue, I'm not sure that's logically consistent. And you have to think about it. But again, in general, our default position is, look, make your case to the judge or the jury. You go ahead and file if you want. Yep, it's possible the other party might be able to force you to pay their legal costs if you're making a ridiculous argument. But that's rare. Most of the time, people are just paying their own legal costs, and it is what it is. And so it's up to the lawyer to do the screening process to say, well, that's not really a case I want to take. I don't really think you have a strong argument there. But the right to sue still remains. Taking it away from somebody just because they don't buy auto insurance, that would be a big step. All right. Then I want to talk about the idea of no-fault auto insurance. And this is a literal term. We're not going to consider fault. All right, so totally different. Up till now, the whole issue is, whose fault was the accident? That person's insurance, their liability insurance should pay. It's their fault. They're at fault. We're not going to think about that at all anymore. We're going to say, you have auto damage, you go straight to your own insurance company. Doesn't matter if somebody hit you or you hit them. You just collect from your own insurance company. Why would we consider that? Well, the suing process is expensive. So if you were going to have a pure no-fault law, nobody would sue anybody. You just go to your own insurer and collect for your damages, and that would be it. And people say, well, maybe that's a better way to do it. I used to teach in Florida, so I'd spend some time talking about their personal injury protection plan that was mandated. In Florida, there's a tiny piece of no-fault coverage that you must have. It's up to the first $10,000 for bodily injury, and then up to the first $6,000 for lost wages. If your claim is completely under that mark, you go straight to your own insurer. If it's above that, the first $10,000 and $6,000, you go to your own insurer. And then for the rest, there would be a liability piece. Michigan has a similar plan. They've got a no-fault piece as well that's required. So if that's where your car is principally garaged, you are buying no-fault auto insurance, at least a piece of it. But no state has been willing to say we're going to remove fault from the equation altogether. Every state says, yep, if your injuries are serious enough, it's a liability system, and that's how we're going to handle it. Nobody has been willing to say, we're going to experiment with this, and you collect from your own insurer only. And why? Well, you look at the arguments. You say, well, why would you do that in the first place? Well, sometimes it's hard to determine whose fault an accident really is. Okay, I pulled out in front of somebody, but they were going too fast. I shouldn't have pulled out. But if they weren't going that fast, then there wouldn't have been an accident. That's a situation where you can't really determine whose fault the accident is. And ultimately, insurance companies will negotiate that. And that doesn't always make a lot of sense. Well, all right, we're going to accept 38% of the fault, but your driver has to accept 62%. What? Where did you come up with that? It's a negotiation. It doesn't have to make scientific sense. And juries will do that too, where you've got multiple people who are at fault. Somehow they have to determine how much of the fault, what percentage of the fault is attributable to each party. And again, that's a negotiated process, not a scientific one. People who argue, so people say, you know what? Forget about that. That takes time. It's expensive. Let's ignore all that. You just go to your own insurance company. It doesn't matter whose fault the accident is. We'll cut all that cost out of the process. And then we'll have more money available to pay injured people. We also say, look, claims payments are not fair. They're not equitable. People who are seriously injured, they tend to under-collect. And people with minor injuries tend to over-collect. And that's just a characteristic of the system itself, right? So I'm an insurance company. Somebody sues one of my insureds for $5,000. In terms of a liability lawsuit, that's not a very large amount of money. I mean, don't get me wrong, $5,000 is a lot of money. But in the world of liability lawsuits, it isn't. So am I going to go to court and fight that? Probably not. If we can settle this for $5,000, that's all they want. You know what? We're just going to get out of this and be done. If somebody sues me for $500,000, yeah, we're going to go to court and fight that one. And we're going to argue everything. Oh, your lost wages, you were claiming that you were going to get 3% raises every single year. Well, nobody's had raises for the last couple of years. So we're going to argue about that assumption. You were saying you would have got promotions, so your lost wages are higher. We think you wouldn't have. We're going to argue every little thing, right? Because the incentive is there if we can save thousands of dollars by doing that. And so the end result is people who make small claims, they get overcompensated. People who make big claims tend to get undercompensated just because the size of the claim dictates whether or not you should fight it in court. Well, with no fault, there's no fighting. We just pay. And maybe that's a better way to do it. It's estimated that about half the cost attributable to the liability system gets eaten up by court costs and attorney fees. The fault system is expensive. Right? You've got an adversarial system. Each side has a lawyer. They don't work for free. They're smart people. They charge a lot. And again, I'm not complaining about that. If you find yourself in a situation where you need a lawyer, I promise you it's going to be worth it. You're not going to complain about the cost. But that doesn't take away from the fact that, yeah, this is an expensive process to go through. And about half of the money that could have gone to pay victims instead goes to the people who make the system run. That's not particularly efficient. So people say if you switch to no fault, did away with all that, you'd have more money available. Can you think of a group who really doesn't want that to happen? Yeah, attorneys don't really want that to happen. That would be a big blow to them. So that's one of the political problems you're going to have if you're a big supporter of no fault insurance, is you are messing with the livelihoods of people who rely on this stuff. And they're going to speak up. And they're going to say things like, you know what? The current system that we have, it's not that bad. The problems that you hear about, that represents less than 1% of the cases. 99% of the time, this works exactly the way it should. So you might be trying to solve a problem that doesn't really exist. The biggest argument, the one that gets the most traction, is you say, look, in a no-fault system, I pay when somebody else damages me. How's that fair? Safe drivers get penalized. They do. That if you move to no fault, that's going to happen. That's the whole point. Is we're not talking about fault. And there's something about that that really grates against the psyche, right? We want to believe that people who are responsible, they should pay. This does away with that. And it says, nope, doesn't matter who's responsible. You're just going to go to your own insurance company. People don't like that. And then finally, under a pure no-fault system, you don't have any pain and suffering payments. That's a problem because those are real losses, right? I mean, if you talk about somebody who gets injured badly enough and will never walk again, do they deserve compensation for that injury in addition to whatever medical costs they have? I think most people would probably say, yeah, they do. That's a pretty significant life-limiting factor. And if somebody else is responsible for that, well, they should pay for it. In a no-fault system, we don't have anybody to go to. So the right way to handle it is if we can't make it right with money, we don't pay for it. And the truth is you can't make it right. So there are those payments, those losses just get completely unrecognized. You save money in the system, but you really are leaving some people who probably deserve compensation out in the cold. And there are no right answers here, okay? I'm hoping you're getting the point. You have to decide where you stand on these issues, and there's always a counter argument. Thomas Sowell, we get back to that, right? Famous economist, there are no solutions. There are only trade-offs. And in this case, I think he's right. You have to decide which side seems to make more sense. But to back up, no state has gone this direction for all of their auto insurance at this point. The states that have done no fault, it's been small pieces. Big stuff always requires the liability system. Okay, so I wanted to spend some time talking about the rating factors in auto insurance. So let me do that here. All right, so what influences the cost of auto insurance? There's a bunch of things. Some of them are immediately obvious. Territory matters, and usually we're going down to zip code. Where do you keep the car? And I can tell you, I taught at Florida State for a while, and living in Tallahassee, driving is totally different than it is in Muncie, Indiana. Muncie, Indiana, you get to a four-way stop with somebody else, and you'll be gesturing back and forth. No, you go. No, you go, right? Tallahassee, it's a cage match. Who can get there first? It's very aggressive down there. If your light is yellow on your way through the stoplight, you better keep going in Tallahassee, because if you don't, the guy behind you is going to get you. The amount of time you have to wait after a light turns red, after a light turns green before you can safely go, you need to wait a few seconds because the other people haven't finished coming, even though the light's red. It's just a whole different world. A lot more auto accidents in Tallahassee than there are in Muncie. Part of that is population driven. There's more people, but part of it is culture driven. It's aggressive down there in a way that it isn't here. That's reflected in auto insurance rates. It's just a function of accidents, right? The insurance company isn't looking at the cultural factors. They're just saying, how many accidents do we have in this area? That's what we're looking at. And we know that accidents are going to be related mostly to population density. So New Jersey has the highest auto insurance premiums. That's population driven, right? And it's not so much population, it's population density, right? The lowest auto insurance premiums are in places like Idaho, Wyoming, North Dakota, South Dakota. A lot of space, not a lot of people. The less of that you have, the less likely it is that you're going to have an accident. So territory is a big rating factor, and that should be obvious. Age is really a proxy for experience, but it's true that we'll use age as a rating factor. A huge percentage of accidents that's disproportionate belongs to people who are in their first year of driving. So yeah, for a lot of times we're talking 16, 17-year-olds. Their auto insurance premiums are extremely high. And that's statistically driven. We're not discriminating unfairly here. It's reflective of the fact that new drivers cause a lot of accidents. They're just not experienced. It's really not about the age. It's about the experience. Male or female matters. We know that it's not the frequency of the accidents that's affected. Men and women tend to cause accidents at about the same rate, but the severity of accidents that are at fault by men tends to be higher. And so at every age, if everything else is the same, if the only difference is male or female, men pay higher auto insurance premiums. And that's statistically backed up. There's a big group that says, hey, that's not fair because I can't control that. I see their point, but the insurance company says, hey, we got the statistics. And if there's a group that's causing more accidents, that group is going to pay more. Same thing with marital status. What's going on when you get married that makes your accident likelihood go down? Well, the theory is that now that you've got somebody else in your life that you have to care about, you'll drive a little bit more carefully. And that's borne out again by statistics. So the insurance company isn't trying to explain it. The insurance company is saying we have statistics, and that's what we're basing our rating decisions on. So we're not going to argue about it. We're just going to say, look, single people have higher accident rates. They're going to pay more for auto insurance. And that's just how it's going to be. The use of the auto, we usually have 4 categories here. You've got business use, that's the most expensive. Then you have personal use, that's daily use to or from work or school. And then we have pleasure use, which is I have a car, but I don't drive it every day. And then we have farm, that's our last category. And so it's in that order: business, the daily use, the pleasure use, and then the farm use. That's the order of how that influences the premium. And that should follow with the likelihood of being in an accident. If part of your business is driving, you're on the road all the time. If you're driving every day to and from work, that's a busy time that you're on the road with everybody else. If you have a car, like you're a college student, you have a car, but you don't drive it every day, you're less of a risk. You're not on the road every day. And then if you're on the farm, if that's your primary use, plus every once in a while you go into town, if most of the time you're driving on your own property, that's not much of an exposure for liability. So yeah, that's going to be a lower rating factor. On the collision side, mostly the type of auto matters. It matters a little bit on the liability side. If I have a big SUV versus a tiny sedan, like a smart car, right? Well, I could do a lot more damage with the SUV, so my liability premiums are going to be higher there. But it's mostly reflected on the collision and other than collision side. The newer my car, the nicer my car, the more expensive it's going to be to fix, so the higher premium I can expect. And then we know that driving record matters. How many tickets do you have? How many at-fault accidents do you have? Those drop off. So usually within 3 years, some companies go as far as 5, but eventually they will no longer hurt you. So you always have an incentive to try to avoid tickets and accidents. And then finally, insurance score, that's a credit score. And we talked about that before. A lot of people don't realize your credit score impacts what you pay for insurance. Most of the time, I would say credit score, why does that matter? If you're not buying a house or buying a car, your credit score is basically irrelevant, except it influences how much you pay for insurance. And I think most people don't know that, both on the auto side and the homeowner side. So we still have one other problem that we haven't really discussed yet, and that's what do we do with drivers who are high risk? Nobody wants to insure them. So think about somebody who's had multiple DUIs, maybe 5 or 6, a lot. You're an insurance company. You excited about writing insurance for this risk? Yeah, me neither. So you might shop around and everybody might say, you know what, buddy, it doesn't look to me like you've learned your lesson. We're not real interested in selling you insurance. So those drivers are not privately insurable. What do? Well, there's 2 different ways we can handle this, what we call the residual market. So high-risk drivers that can't get it on their own, we call that the residual market. How do we provide? Remember, there's a law that says you have to have auto insurance. What are you supposed to do if nobody will sell it to you? We have to have a way to provide it to you. So the state's going to get involved here, either with what we're going to call an assigned risk plan or a joint underwriting association. The difference is actually pretty small. So with an assigned risk plan, we're going to take your percentage of the market share as an insurance company and assign you specific drivers that make up the portion of people who could not get insurance on their own. So you got your State Farm, you got 25% of the market. That means we're going to give you 25% of the drivers that cannot get insurance on their own. You must insure them. We're going to force you to do that. And then whatever losses they have, you're going to pay. Maybe you have a good year and they don't cause a lot of accidents. Good for you. Maybe you have a bad year, they cause a ton. Tough luck. But you're going to insure 25% of those drivers if that's your market share under an assigned risk plan, and it's specific people that are assigned to you. The other way to do it is with a joint underwriting association. And so what's happening there is instead of giving you the specific drivers, we're going to pool all the expenses from them together. And then whatever 25% of those costs are, that's what you're going to pay. That's the joint underwriting association. So it doesn't come from specific drivers. It doesn't fluctuate much from year to year. We're just going to say all the people who couldn't get auto insurance, 25% of their claims. That's your problem if you have 25% of the market. So this is how we handle the residual market. That's what we mean when we say residual market. We have residual markets everywhere. This is just the most obvious place where it comes up, where you could be required by law to have insurance. Nobody wants to sell it to you. So we have these 2 plans to handle the residual market there. Okay, last thing I wanted to talk about, just wanted to give you some tips with auto insurance. for goodness sake, please don't buy state minimum limits. I realize that's an opinion. I worry about this. I don't want people to come out of my class, get into a horrible car accident, they're at fault, and now they're financially burdened for the rest of their life. That can happen. If I teach enough people, it will happen. I don't want it to happen. This is how you prevent it from happening. Make sure you have high enough liability limits. 250, 500 is a good starting place. And then on top of that, you should be thinking about an umbrella policy. So you really want to know what I think? That's what I think. I think that's the most important thing. I'm not going to test you on that because it is an opinion. But I do think it's the most important thing that I want you to get out of this unit. Mention the umbrella policy. If you've got the resources to take a higher deductible, that's how you save money, because you're carving out the lowest layer, the most expensive layer. When you take a higher deductible, that's what you're doing. So if you go from 500 to 1,000, that extra 500 that you've taken out, that was a layer you were going to go through every single time you had a loss. So by taking that and retaining that, that's the most expensive layer. That will save you the most money on insurance. That's how you play this game. The downside, you have to have the resources to do that. If you don't have $1,000 in the bank, you can't take $1,000 deductible. And so, yeah, that's unfair. But there's all kinds of places in society where if you want to save money, you have to have some resources available. There's all kinds of places where that shows up, right? Grocery shopping. The most effective way to do that is stock up when there's a sale. If you're scraping by paycheck to paycheck, you can't afford to be stocking up on food that you're not going to eat for a month. And so that makes it hard to benefit there. It's the same thing. So it's unfortunate that you have to be in a certain position before that's really going to be of use, but at some point it will be. If you've got an older vehicle that you're talking about something that's worth a couple $1,000s, not much more than that, think real strongly about whether or not it's worth having collision coverage. How long would you have to go without an accident to be able to save up enough money to buy a vehicle and replace that? If you can do that within a couple of years, then it sounds like that collision coverage is pretty expensive. So consider that. And again, it's a function of how valuable the vehicle is. The newer, the nicer it is, it's a no-brainer. You have to have it. When it starts to get old and it's something you can replace out of pocket, not so much. A lot of people don't know this. Shop around. There's a lot of variation. So 2 things you want to do: shop around and then package your homeowners and your auto together. With the internet, it's super easy to shop around today. It doesn't take very long. Every advertisement that's out there is saying, hey, people who switch to us save hundreds of dollars on their auto insurance. Check them out. Take them up on it. Package your homeowners and your auto together because you'll get discounts on both. So most people are better off finding their lowest price and then packaging everything with that company. And then, to the extent that you can, if you can improve your driving record and credit score, do that. These aren't things that happen overnight, but you will see an impact over the course of years. So to the extent that you can do that, that's good advice. Okay, I think that pretty well wraps up everything that I wanted you to know from this unit here. So between these lectures you've had, the problems we've done, the questions on the review sheet, that's what you need to know. Look at the review sheet, make sure you can answer those questions. That's how you'll do the best on this 3rd exam. And now that you've completed watching the lectures here, if you've done the problem lecture, then you're set to go for the exam. So good luck. If you have any trouble, let me know. If you're looking for some more help to get ready, let me know and we'll go from there. Thanks a lot, you guys.